Welcome back, friends. We are joined today by Casey Oiness with Guild Mortgage and Colin Tipp with Guild Mortgage, and we are going to talk about the absolute basics of financing, and that is right from the very beginning. What is the difference between pre-qualification, pre-approval, and pre-underwriting? So let's dive right in.
Right. My favorite. So pre-qualification would be if me and you had a conversation for 5-10 minutes and you told me all these great things about your amazing credit score, how much you make, how much money you got in the bank. And I go, sounds good. And so buy it for $800,000. You're pre-qualified. That's as basic as it gets. Maybe we gather an application, but we don't really gather in the supporting documents to make sure that you actually qualify.
So that's really not worth the paper it's printed on, is what you're saying.
So a lot of times, like, people go online and they'll type in this information. It's pretty much a questionnaire, which FICO score, right? Between 780 and 800, income between here and here, this and, it's all this stuff. And then they're like, submit. Congratulations, you're pre-qualified. Here's your rate. And they just put together this generic information, right? A pre-approval takes it one step further, and that should be the baseline. You shouldn't do anything but a pre-approval, in my opinion.
Absolutely.
A pre-approval is, we're going to gather a full application. We're going to gather your credit report. We'll start with a soft pull because people are a little sensitive with that. Sometimes a hard pull is necessary if there's questions or issues that can come up, especially on jumbo financing. We like to get a hard inquiry. And on that note, we'll maybe come back to that, but I think it's a good thing to talk about too. And then credit, income, assets, get all the documentation to support that. And then once we reviewed it all, maybe we confirm that you qualify, and then what you said is what's actually true based off supporting documents, issue a pre-approval letter.
And that is, the pre-approval is largely putting it all into the system, and the system spits out what you need. You haven't actually manually had a person review everything, because that's when we get into pre-underwriting, right? When an application is...
We're actually looking at it, whether it's me, Colin, our team. We have 3 people on our team we call them the pre-approval team. Super experienced people, somebody from 20 years of underwriting experience to 10 plus years of processing experience to 5-10 years in general mortgage experience. So the next step would be kind of what we call a pre-underwritten, pre-approval. And that's where our pre-approval will actually look at the documentation, just make sure that it's all correct. The system is going to kind of auto look at some of it, but there's a lot that we have to double verify. I think technology is moving to this point where some of that through AI is going to come more into play with some of that. But the underwriting is that last final step that really gives you 100% confidence. And so there's many times where either we've seen clients get pre-approved with another lender, and then something comes up and it blows up. 99% of all of our clients, we do the full pre-underwrite on. And that way, there's no hiccups, no surprises, nothing come up. And a lot of times we'll go into underwriting, and the underwriter will catch something that maybe we didn't see for whatever reason, or, they ask for some additional documentation that then brings something up that, gets...
I think documentation is one thing that comes up, for me anyways, has come up a lot just because it smooths out. It takes 2 weeks to get some letter from somebody who, for whatever reason, they need a letter for something, about that ahead of time versus, oh, now we're in contract and oops, we need this.
Right.
You've got it ahead of time.
Yeah.
And I generally coach my clients that pre-underwriting is as close to cash as you can get without having cash. And that is the gold standard. That's it. That's as high as you can go as far as levels of approval. And I think that I agree. I think everybody should be doing this, or at least close to it.
It puts your clients in a position, or the client in a position, that they can then, waive the financing contingency, which gives them one step further in being more aggressive and closer to a cash offer, like you said. And that we at Guild have an earnest money protection plan that allows them to, waive that contingency, but also be protected if we've done all the pre-underwritten work.
Yeah, that's an awesome program, actually. Want to plug that really quick?
So if somebody gets all the way dialed in, fully underwritten, they're going to make an offer. And as the market heats up, it gets a little more competitive. Sometimes the difference between winning a house and not winning a house is waiving some of the contingencies. You can be the same exact offer. One doesn't have contingencies and one does. So we put this program together to allow our clients to be able to make an offer without the contingencies, but then Guild saying, hey, we've done the due diligence. As long as you don't quit your job,
right,
or below your down payment money, then we'll guarantee, $20,000 of your earnest money with making that offer. And that's a sizable amount to put on the table. And it gives the clients the peace of mind, especially whether it's first time home buyer, just not used to having to like kind of do that type of stuff to win.
Yeah.
But that's fairly common. I mean, we've been doing this for, almost 10 years, 9 years at Guild. And it's definitely helped us, our clients win offers, not being the highest priced offer, but being the most well put together offer.
Certainly in this market, that is absolutely necessary.
Yeah. And the competitive nature of an area and region really makes a big difference to, pre-qualification is just off the table. That there's no work done. That is useless, in my opinion. A pre-approval, you can still offer on with it and do that. But in a very competitive market like we're in here, pre-underwriting is very important because it gives the seller confidence that your loan is well put together. It's already reviewed, part of the process, already been done with the underwriter. So it is very important if you're going for a house that other people want too. I think definitely make a big difference.
That guarantee is a huge thing too, not just for the client, but for the seller to know that, hey, this lender is so certain about this that they're willing to put their own money on the line because no other program or pre-approval does the lender actually have anything on the line.
Right.
Fails, and if everything fails, then it's the buyer's problem, not the lender's. This is you guys actually sticking it out there saying, yeah, we're got some skin in this game.
Put our money where our mouth.
Exactly. Yep. I wish more lenders would do that. And then what kind of information do you guys need? Let's just focus on the pre-underwriting because that should be the gold standard. So what kind of information do they need? And then how long does that process take?
Our process typically, our goal is to turn everything around within 24 hours of receiving something. Once we get application within 24 hours, we've got it reviewed and back to you. We can obviously expedite that when we know it's an urgent situation, and a lot of times same day. You can experience that. Yeah. But pre-underwriting, usually 24, 48 hours, somewhere in there, maybe 1 to 3 days, depending on the circumstances. If it's a super complex file, self-employed,
somebody owns 4 businesses, hasn't filed taxes in 2 years.
So sometimes the more qualified a person, the more complicated their finances are. Not complicated, but just more things to work through. Mm-hmm. So, but in general, pay stubs, W-2s, bank statements. We don't always need tax returns, sometimes tax returns. And then if they're self-employed, then we need business returns. We have a lot of tech people in our community. Yeah. And so a lot of times we have to get their investment portfolios and have to work through their RSU income stuff. So that's restricted stock units for some of the major employers like Amazon, Facebook, or I guess not Meta, Google, TikTok, Snapchat.
All of them.
They all have different types of RSU packages, but the thing that's pretty cool about our team, I think, is that we do see a lot of those different packages. And I think we've literally seen, I won't say every single one because tomorrow I'll see one that's brand new, but so it's interesting to see how those all come together.
Yeah. That's interesting because I think that's another, I think people think that a pre-underwriting, when you're going through underwriting, and it used to be when lenders would do pre-underwriting, it used to take a lot of them a week to 2 weeks because it just wasn't something that was done regularly. But when you do them more, you get your processes down. And it's not as arduous as you might think, and the benefit far outweighs the little bit of time and work that goes into it.
Yeah, I've seen a certain file get done the same day, and then I've seen others take a couple days for sure. So it just depends on the loan.
And if you're pushing to fight something, we've had pre-underwriting take weeks because we're pushing back and forth trying to get to where they need to get to make it work for the buyer. And maybe they just got maybe they're new at their employer, or
got to get that first pay stub, or
just make some exceptions, or push along.
But that is the advantage, is that you're doing it before you're in contract. You're not doing that all afterwards, and that's what makes the seller more confident. Is you've already been vetted, you've gone through this hassle, sort of the extra steps, and you're basically the only things that can really affect you are job loss or vacation somewhere spending all your money.
And it gives the buyer peace of mind. I think that's the biggest thing. Overwhelming process sometimes. Once you've got all your ducks in a row, then it's it's kind of smooth sailing.
Okay. Then a couple other questions. One, you talked about a soft pull. Do you guys do a hard? You still do the soft pull for the underwriting, or you do a hard pull for that?
You can do, so it depends on the program. You can get your file underwritten with the soft pull for sure, but to close a loan, you have to have the hard pull. So As soon as somebody gets into contract, that's, it's pretty amazing. The soft pull, as long as it's within the reasonable time frame where your credit score is not showing, it's always identical. It's the score will match all three bureaus, and we just need to do the hard pull once they get into contract. Certain loan programs like government loans, for an actual like system approval, you'd need a hard pull.
Gotcha. But that's something you're going to talk with the client about ahead of time, make sure they're aware and know what they're getting into. And yeah, I think that's a good point. They all are going to eventually require a hard pull. There's no way around that.
Typically we like to, when are you going to start making offers? Are you really active right now? Or is this something you're preparing for springtime? That really will determine also like whether they'll want to do a soft pull, get everything together, get ready, and then we'll do the hard pull when they're either making offers or they get into contract.
Right. That makes sense. And then really good question that always comes up, and I know this can vary depending on the lender, but how long are those good for? The pre-approval, the pre-underwriting, how long are they good for? They actually go through the process every month or 90 days or ever?
I think it is lender specific, like you said. I think banks are pretty standard that once the credit report expires, they make the client reapply. The credit reports itself, when we do a soft pull, it's not a big deal if we re-pull the credit out. Well, we're not going to keep re-pulling it. If they've got good credit, then we're just going to make the assumption that the credit's going to stay intact. So our pre-approval is good as long as nothing material changes in their circumstances. So they got pre-approved today and they bought in October. Obviously, before they make the offer in October, we tell them, hey, let's connect and make sure that nothing's changed. Are you still the same job?
Did you go buy a new cyber truck?
Give it a car loan.
Yeah.
And then we'll probably update the report with the soft pull, which doesn't have any impact on their credit. And sometimes if things are tight, maybe we say, hey, let's get an updated bank statement or whatnot. We don't have them, the whole pre-approval expire. It's deleted. Now you have to go reapply. Send us all new documents, because that's just a hassle for the client. I tell clients it's kind of like we're like their advisor. We're just like, as they're going through this home buying process, and as life changes, hey, I got a new job. Okay, well, let's update it.
Right.
Let's adjust what the finances look like. Let's adjust the plan a little bit. Now you've got, instead of 5%, you've got 20% down now, right? Or you're going to get this big bonus in 6 months. Maybe we structure the loan in a way that it meets the needs now, but then when that bonus hits in 6 months, we can plan for that. And so I think it varies a little bit. And with the soft pull too, there's no impact, so it doesn't really matter that much.
Right.
If we do a hard pull, we also want to try to opt our clients out of the solicitation calls that happen. So there's an opt-out process for our clients too, which is nice.
That's awesome. Yeah, I forget that's become kind of a big thing. People are getting just hammered with solicitations after a hard pull for a mortgage.
You do 100 calls in like a couple of days. It's insane.
It's insane. Yeah. Thing that, I get asked a lot, or one of the sort of excuses that buyers come up with a lot of times for not getting pre-approved right away is, oh, well, I don't want to hit my credit and then keep hitting it. Well, it doesn't really harm you. Then you might as well just do it. Just pull the Band-Aid off, see what you got. There's no point in wasting time. And part of it is maybe your credit isn't ready. That's where you guys take a look. And like I said, it might be like, hey, let's work on this, this, and this, and we can get you to a better position. But we don't know that until they go through the process. And you don't want to be, doing a pre-approval for an offer tomorrow when, doing certain things over a week could bring your credit score up 60 points. Well, we're kind of late on that now. That ship has sailed.
I think a lot of clients will call in and say, before you do anything, I'm thinking about doing X, Y, Z. Like maybe I'm thinking about paying off my car, or I'm going to close my credit card. Well, that sounds like a logical thing to do that would improve their credit. But if you pay off a credit card and you close it that has a 3-year history of great credit, and you close that credit card, you deleted all that good history. And now your score will actually drop.
Right.
So there's a lot of things that to the common, like that just make common sense, you would think would be beneficial, but it actually does the opposite. So it's always best, like, hey, we just want to start with where you're currently at, and then we'll give you a roadmap to improve your situation if you need to. Right. If you don't need to, don't do it, right? Like, there's no point in doing all these extra hoops. So I think sometimes it goes to like that conversation about like, there's so much data out there that people look at all the data online and research, and that's great, but sometimes it can actually negatively impact people. So I think having that conversation with a trusted lender and that can point you in the right direction based off of your specific situation, not just a general, this meets everybody's.
Lowest common denominator.
Yeah, exactly.
And then really quickly, what documents are they going to need to get you? Like what they should be preparing for pre-approval, pre-underwriting, as they're filing their taxes and, throwing it in a file cabinet, should they keep them out? What should they just be ready to have for you?
It will depend on a few things on what we request. There will be what type of employment they have, what type of loan program they're being fit into. So I would say, generally speaking, let's say it's like a W-2 employee. If it's salaried, we would just need 30 days pay stubs, 2 years W-2s, bank statements for how you're going to fund your loan. If you're, a permanent resident, we'd want your green card. So we make sure that all checks out. Yeah. So those would be the basic documents. For self-employed, it would be, 2 years tax returns, profit and loss, balance sheet, banking information. Yeah. So each job's different. Hourly, we're going to need, potentially some year-end pay stubs for the last 2 years, so we can get the year-to-date amounts to be able to average out, bonus, commission, things that, so we would average that pay out instead of just looking at one stub and just, this is how much they make. We look at over time.
See what's consistent.
Yes. Those would be most of the basic documents for pre-approval. Maybe once it goes into pre-underwriting, we just get some verifications done and just solidify, the documents. And
what about like investments, 401ks, stocks? Do you guys need that, or is that just on a case-by-case basis?
Case by case, but most of the time, if you upload your retirement and 401ks, it's a good thing. Just you'll have reserves. If you're in a jumbo program, you're going to need reserves. And so that's typically what people will use for reserves a lot of the time, is because they're not going to withdraw out of those accounts. They'll just put them in, and we calculate the month's amount of reserves through retirement a lot of the time, or 401k.
Cool. I always tell clients, like, it's better for you to give us your whole entire picture, and then we can sort out what is needed for underwriting. And the belief that, the standards, like, less is more when it goes into underwriting. We actually don't want to give the underwriter everything because then they'll ask about everything. But it's good for us on the front end to see everything, so we can piece it together the best way to make underwriting go, oh, this is beautiful. Let's just sign off and give it an approval and move it forward, instead of giving just the necessary. And then the underwriter's like clawing for everything, right? So it's kind of a combination of giving us.
Then we're going back to the client. I need this. I need this. I need this.
And that's painful for them, and painful for us, and just adds more time to the process.
Definitely. Well, this is great. We'll be back with some more videos. This wraps this one up. Thank you guys for joining, and we'll see you next time.